Hey everybody, this is John, and welcome to the free video. Let's dive in and take a look. And what we've got going on here is a tale of really a couple of different markets. The first thing I want to look at is the Qs. The Qs have been on fire since the March lows. One thing I want to point out is that nearly all the gains have happened in the first 15 days of the rally, and really nothing has happened in the second 15 days of the rally. That's not good or bad. It's just pointing out that, this has been a lot of chop back and forth since those 15-day highs were made. If we're looking in here at the put-call ratio, when the markets kind of had a sell-off here on, what was that, Friday? The put-call ratio popped up, meaning that everybody was panicking and going short, and typically the markets do exactly the opposite of that. You can see that happened right here too. So that happened, we've rallied, and now we've come down to levels where, when it gets long, it typically falls off. So it's getting to a point where I think it makes sense that, are we going to explode higher from here and go to new highs, or are we going to get more back and forth? Well, the NASDAQ is the trickiest one here. I think if there's anything I'm going to bet on the long side, it's going to be on the NASDAQ. That being said, when we go and look at the spiders, it's a little bit more balanced view. Same thing here, of course. We've had the first 15 days generated all the returns. The last 15 days we've been trading sideways. It's no surprise that we're developing a squeeze here to see which way this is going to fire. Same thing here with the put-call ratio. But then when we dig down and look at the IWM, okay, certainly this thing has not had the rally strength of its peers and looks worse. And then when we look at the transports via IYT, we're breaking down here. And it's important to point out that the transports were the first ones to sell off as well. So they're a leading indicator. And the fact that we're breaking down here is more reflective of oftentimes you'll get a sell signal like this 2, 3, 4, 5 days, and then the rest of the indexes will follow suit. So I would just be careful here. Now, if I'm going to buy something, am I going to buy calls on Shopify? Of course. This stock doesn't care about what the indexes are doing, and there's a lot of stocks out there not a lot of stocks, but there's a handful of stocks out there like that. I'm not betting against those stocks, and I think those stocks are going to do well regardless of the indexes. But to stick our head in the sands and hope that the indexes have bottomed, are going to make new highs, I do think is very foolish at this point. And so my strategy here is looking for stocks like Shopify to buy on dips while loading the boat on like long puts on things like IYT and IWM. All right, hope that helps. And you guys have a good one, and we'll see you at the next update.